Okay, somebody read my cartoon and laugh. Now, the scary thing is that this is almost perfectly true, people. Nobody knows which way the market's going to go. It really almost comes down to a bull and a bear flipping a coin to see who goes out first. Okay? These are the items that we're going to be talking about foremost. We're going to talk about some trading philosophy, psychology. We're going to have an introduction to level 2. We're going to get into some terminology this afternoon. And we'll start reading market data immediately so that we can start to look at how the market actually works. This class is for you people. You ready? You need to ask questions, but I need you to help me out here. I need you to stay on topic. If I'm talking about level 2, don't ask me about sectors. If I'm talking about sectors, don't ask me about level 2. Stay on topic and I'll answer all your questions for you. Alrighty. I didn't mention it, cell phones. I have no problem with cell phones. If you have them, please just take your call, go out the door, take care of business, and come right back in. You don't have to turn them off. All I do is ask you to turn them down to vibrate or low ring. Alrighty? I'll give you plenty of breaks. Usually you get a break about every hour, hour and 15 minutes, depending on where we are in the lecture. But if your bladders are not on my schedule, feel free to just get up and go, okay? When I tell you that we have a break, we'll be going by this clock up here, and I'll say something like it's 1/4 right now. I want you back at the 30, right on the 6. I start lecturing at the 31, so if you're not back, you're going to miss something. All righty? Okay, let's talk just a little bit about what's going to happen here, and I'll give you a little bit of background on me. I was an investor, okay? I was probably like most of you guys. I just started it a long time ago. I got into the markets in the early 70s. At that point, I was a diving instructor. I had a couple of scuba shops here in Southern California, and I was making some very, very good money with it. It was a wonderful living. But the problem was that I went to one of the online brokerages. Of course, they weren't online in those days. We didn't have computers, okay? Picked up the telephone, and one of the bigger ones said, "Mike, come on in. We're bullish on America. We'll show you how to do it. You got to buy the Nifty 50 on margin." And I said, "Oh, okay." And I gave them all my money. All righty? Well, 1972 came along, and we had the oil embargo. The market went thump, and I lost literally hundreds of thousands of dollars. In fact, I lost all the money I put in there, and then I fed the kitty another 100,000 in margin calls. By 1975, I was down almost $500,000. Okay, I was very, very upset, angry beyond belief. And I said, "Who's got my money? Who took my money? It wasn't just the market taking my money. Somebody has my money. Who made money on this deal?" And of course, it was the brokers. So that was who I started to focus on. I went out and I bought a couple of books, okay, one of them which is Reminiscence of a Stock Operator. You'll find it in your reading list and your manuals there, okay, on your book list. And I read that, and it was the story about Jesse Livermore. And it was kind of fictionalized, but Jesse Livermore was one of the great traders of the beginning of the 1900s through the 1930s and stuff. And throughout the book, there was just one recurring theme that kept coming up. And that theme was don't lose money. Learn how to cut your losses. And with that thought, and only that thought, I became an enlightened investor. I still wasn't a trader, but I started making money by simply buying stocks. I didn't know how to go short. I didn't understand the downside of the market. I didn't understand the intricacies. But all I did was look for something that was going up. I would buy it, okay? And the moment it started to come back down, I would sell it. Well, that eventually evolved into a very crude plan. My plan was that anytime it was over 5% up, okay, and stopped going up, I would sell it. And if it ever went down to 1%, I would sell it. Well, I started making more money, okay, in the market than I was as a dive shop operator. And By the late 70s, early 80s, I was making a ton of money in the market. Well, life handed me a rather bad moment, I should say. Life did. I actually did it myself. I managed to break my back, okay? And I didn't get hit by a car, and a bridge didn't fall on me. I actually did something foolish, and I'll tell you guys all the grim story about it on break. But basically, I could no longer teach diving, huh? Not with a broken back. I couldn't put anybody else's life at risk because I couldn't perform. And I realized that I wasn't going to be making my living with my body anymore. So what did I naturally turn to? The market. I was already making money in the market. So I studied and studied, and I went through and I got myself involved in commodities futures. Things like grains and sugar and the precious metals, copper, silver, gold, that kind of stuff. And I started becoming very interested in that. So I took and passed my Series 3 test. And I was sponsored by a company over here in Irvine who dealt with that kind of stuff. And I went to work as a broker. And I called people up on the phone and I said, hey, this is Mike. Remember I talked to you about 6 months ago, and at that time I had a good recommendation for you. You guys ever have one of those kinds of calls? Yeah. Okay, they're reading off a card. You ready? Keep smiling and dialing. And I couldn't do this. I wanted to trade. I wanted to be a big trader, okay? So I applied to Drexel Burnham Lambert in Chicago, and in their wisdom, they were smart enough to hire me. And I went back there and worked in the pits. I was a floor runner for a trader, which meant I fetched his coffee, okay, and I ran his tickets over to the phone bank. Now realize, guys, this is, the early 80s. They didn't have computers. I mean, they had rudimentary ones, but not like you and I know them, okay? So everything was still done by paper and people and telephones and calling it into trade desks and stuff like that. Eventually, I did manage to get my ticket and get to wear my little badge and wiggle my fingers at the public or at the other traders, okay? During that time, I was mentored by a guy named Sal Goldberg. And Sal was an older trader, and he's the one that kind of took me off to the side and really taught me the meaning of trading. And it was there I learned, people, and this is very, very important, that the market does not necessarily work on supply and demand. There's a tremendous amount of manipulation that goes on in this market. Some of it legal, some of it a little in the gray area, shall we say, okay? But there is a tremendous amount of manipulation. So we have to always be mindful that it's not just simple economics 101. A lot of demand, limited supply, price goes up. A lot of supply, limited demand, price goes down, huh? So we're going to see things that are going on in here. Well, I don't want to bore you. How many people have ever heard of Michael Milken? Okay. Well, in the mid to late 80s, Michael Milken had done his junk bond routine. Ultimately, that destroyed Drexel. I was out of a job. I came back here to California, and I became the head trader in a small firm not far from here, over in South Coast Plaza in the Union Bank building. It was called Cambridge Financial. And they made deals in precious metals only. They didn't deal in corn and grain and hog bellies and orange juice, strictly the precious metals. And in their wisdom, they eventually made me their head trader. So I started trading for the company. Now, you want a sweet deal. I got 10% of anything I made, and I didn't participate in any of the losses. And I had almost unlimited funds to work with. This was wonderful. But the bad news is that in order for the brokerage to work, okay, you need willing people to give up their money. That's the sad thing, okay? If you ever think about the brokerage system, it really truly is parasitic. And I say that because what they do is they get a bunch of clients into their corral, and they go around and they take a little bit of blood from everybody. They never want to kill any one of the sheep, okay? But they want to take a little blood from every one of them every month, one way or the other, whether it's in fees, whether it's in commissions, whether it's in slippage. I want to buy this for $20, and you get filled for $20.05, and you say, well, I wanted this stock anyway. It's what's a nickel? Well, you know, a nickel on 1,000 shares is what? $50. And suddenly you think you're getting the best commission rate. Oh, I'm only paying $7.95 or $5, but you have a $50 load on that. And if you go the other way, then that's not just $57. It now becomes what? $114, huh? They slip you a nickel both sides. And so those cheap commissions really start to add up very, very quickly if you look at the load. Well, I was that person. I'm sure you've all seen some of the TV commercials where the floor manager comes out to his brokers and he says, guys, I have, championship ringside tickets here for the basketball game, and we got to put some lipstick on this pig and move it. If you sell all the stock, we'll be all heroes, okay? Well, I was that person. I used to walk out onto my floor and I would see all my smiling brokers there who wanted to make a living, and I'd say, guys, I'm looking at my charts and I'm reading my Reuters news service over here, and I say that silver is going up. I want you to get on the phones and call your best customers and tell them to go long silver. And then I'd walk into my booth and start to sell silver short. And I needed customers. I needed somebody to buy it from me. Well, people, without sounding too noble, that after about a year of doing this, this was so directly personal with the public or with our clientele that I started feeling guilty. Okay, when I was in the pits, I was insulated. It didn't seem like I was trading against people. But here I was literally saying these things. Let's put some lipstick on this silver and move it to these brokers. And so there was a lot of other reasons, but let's just say that I became a little soul sick about it, and I quit. I handed in my resignation, and in 1991 I turned private trader. Now in 1991, we were strictly on telephones still, huh? We weren't doing online trading. We didn't have direct access. So I was dealing with the major household names that you've all heard, Payne Weber, Merrill Lynch, Dean Witter. Those were the big retailers of the early 90s. And at that time, if you guys weren't in the market then, you have to appreciate how wonderful you have it now. I was paying $150, $170 one way. So I had to overcome, you know, $350 to $400 break even. But I made money. And the reason I made money is because I understood what was going on the other side. And during this course, I'm going to give you close to 1,000 cliches. I want you to think about them, write them down, noodle on them, because they really, why is a cliche a cliche? Because it's most often right, okay? So your first one, and the one I'm talking about right now, is a trap is not a trap if you see it. It's an opportunity, okay? A trap isn't a trap if you see it. It's an opportunity. What's the corollary to that? The second mouse always gets the cheese. The first mouse reaches in, whack, okay? The second one can then get the cheese. So because I understood the trade desk situation and how the brokers used the order flow, I was able to see the trap and go around it and still make a living. Again, I don't want to drag this out all morning long here, but in 1997,